Welcome to Trading Lounge and the US daily stocks for the 4th of January. I just want to start with the S&P here because, as you know, I've been tracking a bullish count and a bearish count, and with the bullish count, it does appear that that may be the correct one. But what we would need to see is a move at least above this high here to confirm that. And because we're working with the 4,800, which is a minor level, that means that we can use it as a trade setup. So if the market pushes up through here, then it's going to have a small reversal in this particular case as up for wave one, and we'll take a closer look at this when I do the indice video, and then up from that point. So the safe trade would be finding that little first high above the level. Now it may be lower than that. All we need to do is really breach this, so we'll take a closer look at that. But if this move up here is going to be impulsive that we've been looking at in stocks as well, then we'll probably have to look at this being impulsive in stocks. So yeah, so that's sort of where we're at with this. So let's go in and have a look. So with Amazon here, I've been expecting it to move down, and there's still a case that it can do that. But now we'll also need to look at the bullish case for this as well. So I was kind of looking at it sort of coming in and giving me something like this here to finish off. But it may not be the case where it finishes off like this and just goes straight up from that point. Now there's two ways I can count this here. I can put this wave 4 in here for this, and I'll show you that count. But it's also possible to have this wave 4 sitting over here as well, and looking at this as a whole impulse wave up through here, and looking at this as an A and a B and a C wave here. I'm not that happy with that because this little move here appears to be quite clearly in 5 waves, so probably this is better fitted in this space. I'll go to the intraday in a moment and just check what I've done with that and how that pans out. I know it would have to go on that low there, so putting that wave Y here like this and finishing it off like that. So what I was thinking in this case is that the markets do look bullish, I give you that, but I do need the S&P to take out that particular top to help confirm that. In this case here, whatever comes first, the 34.20 here as a nice tested support could take the first position, with the second position at 34.30, and the 30 there is the top of minor group of subgroup 1, because here we've got the minor levels 100, 200 and 300. That's the minor group 1, and then the 30 above here, or the 10, 20 and 30 in this little space here, is the subgroups, the next degree smaller. So let's go in and have a look at that. Even though I've probably, expecting this to move down here and getting it wrong, I haven't really created too much I haven't really created any damage really, or not much anyway. So let's just see. So on the bearish side, we're looking, this is how we've basically had it, and you can see we've got those little 5 waves there, a bit of an overlap, but that's kind of okay, I guess, to a point. Now looking at this as wave 1, now that little move up here is impulsive, so we'd have to look at that as wave an A, and then back for a B, and then up for a C wave at that stage. Now this little line here is at 34.30. But as I mentioned, we can come in at 20 for that. But so yeah, looking for it to still move down here in 1, 2, 3, 4, 5 for 1, and then coming back for 2 over here, and then 3 and 4 and so on, coming down here for that. but it doesn't, it looks like it's reluctantly moving that. So I need to see how this can be sort of reconfigured, and I think I may have done that on the 5-tick chart, so I'll just go in there and check on that, which I think I did. Yeah, so this would be the bullish count, sort of winding it all in at this point. So still looking for a W and an X here and a Y here in orange, a minor degree to take on wave, intermediate wave 4, and then we would have this as a W, an X here, and then a Y here with an A, B, C for the B wave, and 5 waves down for the C wave finishing. And then looking at, instead of getting 3 waves up for the correction as an A, B, C, as I just mentioned, we end up getting 5 waves up here. And if we do get 5 waves up there, well, then we're going to get a pullback for wave 2, and we, of course, we can look to go long at that point through here. Now, as I just mentioned, we could get in a little bit earlier. Oh no, I've made a mistake. I meant to be 34.20. So let's just go in and put these. Let's put 34 in here. And that's where the market obviously is resisting at the moment, of course. So let's just give that a bit of definition. And then, because let's still assume this is 5 waves here. And I mean, the other way we could look at this here is 1, 2, 3, 4, 5 for 1 here, an A wave, a B wave here, and then a C wave down through to here. So there's a couple of ways to look at it. We could also look at this as wave 1 here as well. So there's a couple of ways on the bullish side we can look at it, and it does look like it wants to, you know, really pop at this point. But we just really want to be a little bit certain about things. So let's just do that. So, well, first of all, if we take this top here and this low here, we're at the 50-60% retracement level here. Okay, so we'll just put that in there so we're aware of that tomorrow as well. So what I normally find with the market, if it reaches its 61.8% in 3 waves, then I know it's corrective. If it reaches it in 5 waves, then it's more than likely to be bullish. So I think that this is more than likely to be bullish, rather than giving us this as the little A wave, back for a B wave, and up for a C wave and folding. So because they're already we can go to 78.6. In fact, we can go all the way to this top here, you know, before we breached here. So we could get that little ABC pattern in here somewhere, and then fold further down here. So that's the trick that we have to move past. Okay, so if we take 34, and then from 34 to 35 here, we've got that 100 points there. So then we can go, well, the midpoint here at 50 is the most important number, and the second most important number we've got the 8 there, and we've also got, then we've got 3 here. So 34, 30, if I can just get that in there. There we go. So normally that would be the top of group 1, okay? And we can put the 20 in here. And of course 10. So 1, 2, and 3 here make up group 1. So 1, 2, 3, 5, and 8. And with 8 we can also put in group 2 here. So 34.65 and 34.72. But I won't do that at the moment. So normally if we get support, a tested support on top of this level here, that's not support, that's not support, that's not support. So we need that classic trading levels pattern as the support, which looks like this. If that was 34.30 here, we would need the arrival, the reaction, and the first high above the level. Now those other little moves above there had that, and they also had this as well, but they didn't breach that high, they didn't breach that high, or they didn't create another little classic. This will also be a classic trading levels pattern in here as well. The arrival, the reaction, the first high above the level, the ABC. So it'll be all tied up in there as well. So this is normally the better refined entry at that particular point. So that's what we're looking for. But we could also take this particular pattern here and do it at the 20. So obviously you'll need to get quite close to the market at that point. So this is a classic trading levels pattern here as well. So we've got the arrival, the reaction, the first high above the level, then the ABC pattern, and then we've got this here. So technically, based on these 5 waves here, you can go long here if you want to take that risk, and the stop would just go under this low here. Okay, but you could build that on top of the 20 to be sure, and then onto the top of the 30. I mean, when I normally trade, if I've got the time to do day trading, then then I just start to build in. I'd build in as if I could see, if I could see what's going, I'd build on 3,400 here, then the 10, then the 20, and then the 30, and then the 50 at that point as well. That's how I move in, because I like to manage my risk, my exposure. It's all about the exposure that you have, of course. So yeah, so if you're looking for the safe trade, it's up here for that. But if you're gung-ho and you got the guns out and blazing down towards the saloon, well then this is where you want to be at this point in time. Okay, let's cruise on. So with Google here, Amazon, Alphabet, sorry, we've got the same sort of situation as well. Now, I was looking at this here, as you know, as the A wave here, then an A and a B and a C wave here for the B wave, and then coming down for the C wave here. That's okay, but I don't have 5 waves here yet. I only have 3 waves to the 50% retracement level here. Now, if I get another move down, this move here, if I could make another low into the 61.8% area here, then I know that I have 5 waves down here. And if I have 5 waves down here, then I'll have an ABC pattern here, and then I'll go down further, and the short trade would be over here on this for that. If I'm only left with this here, as I know it's a bit difficult to see, but 1, 2, 3, 4, 5 in here, so an A wave, a B wave, and a C wave here. So we can also just go straight up from here. So we need to talk about how to handle that as well. Obviously up here would be the safe trade. But if that was the case, if we do go straight up from here, then that move that I showed you on the S&P, we know this is 5 waves anyway because I've got it as a C wave there, but we'd probably have to look at it as wave 1. And then coming back for wave 2 in that case, okay? But then how do we configure the rest of it? Well, then all of this here would become the X, and then a Y, WXY, sorry. Let me get my act together. I was doing quite well there for a moment. So a WXY here, and as an A and a B and a C finishing off here. So this would be the wave 4 here, and then we'd look at this as wave 1 and wave 2 here. So once again, we need to have a look at this here. When you see that there, that when I might have 10T or 5T, it just means that I've got that setup sitting here on a 5-tick chart. So we'll go to the 5-tick chart. Bring in a bit more data. So I'm just sort of running both counts here, but this would be, if we're looking at the bullish count, that would be wave 1 here and wave 2 at this point. And then you can see here we've got 1, 2, 3, 4, 5 for the A wave or wave 1, and ABC for wave 2 or B, and then we'll just assume all of this is wave 3 here. Now, if that's going to be the case, I know this is splitting hairs here a little bit, but I think the devil's in the detail, so to speak. Should be God's in the detail, I guess. So from wave 2 to wave 3 here, coming back for wave 4, that's the 38.2% retracement here. So really, we don't want it going any higher than that 50% there. You with me? So that means what I've got over here, I've got the 29, obviously this is all dancing at the 2900 area through here, all of this. So I'll just give that some definition as well. There, so yeah, so 38.2% retracement. I will remove that. So we know that that's there. So we can just put that wave 4 sitting here now. And it's in a nice 3 wave there, but at the same time we could look at this probably splitting hairs again as 1 and 2 in here, and 3 and 4 and 5, or up for 1 and back for 2, up for 1 and back for 2. So there's a variety of things in there that could occur. But we know the 38.2% retracement level is here, so that means that normally would go long on top of group 1. So 10, so 1, 2 and 3 make up group 1, and then we have the midpoint 50 and then 80. We can also bring in some other numbers for group 2 here at 65 and so on. Oh, close enough to 65, and 72 in here somewhere. Close enough. I'll just give that a bit of color there, just nothing special, just a design thing, just to make things a bit more obvious. So I was thinking, I mean, normally go long on top of 29.30, the top of group 1. That would be subgroup 1. But I think we could also do it if we found the first high on top of the 20 now. That could be at, because also between 20 and 30, the Fibonacci numbers run again as well. You got from 20, you got 1, 2, 3, which would make up micro group 1, and then 5 in there somewhere, and then 8. So when you're looking for that first high there, you'd start looking at number 5 first, so 29.25. Anyway, we'll just see how that goes out. We're just preparing for that upside there, but otherwise this would, if it's going to move down, we need those 5 waves down to the 61.8%, and then we don't want to chase that low there because we'll get trapped, because then we'll get some sort of ABC correction coming, trying to get back up here before dropping again at that point. So we can move this across to this point, or not that, you have to stay there, my friend. Yeah, so something of that degree, and this becomes wave 1 down here, and this becomes wave 2 here. So just a little bit of patience and we'll have this, we'll get this sorted out. But yeah, that's the way that we approach it, and let's see how the cookie crumbles. Let's cruise on to the next one. So with Apple here, that move up in the S&P that I showed you would also reflect this little move here as well. So in this case, we need to look at this as 1, 2, 3, 4, 5 here, I believe. And I've just rearranged my little trend here of having 1 and 2 in here, and then having all of this as the 3rd wave, 4th wave here, then 1, 2, 3, 4, 5, going up to 200. So yeah, Apple's there. Yeah, I bought some myself actually, not a lot. I'm not a big trader, but if I find a really good, I mean, my aim for this year, of course, is at the beginning of the year, in my mind, I work out what I'm going to do for the year and how I'm going to do it, and I have a look at my property portfolio, my longer term positions in the market, and all the rest of it. So, I want to reduce my debt to equity ratio in my property. I've got it at about 20%. I want to get it down to 15% because of inflation's coming up. My trading account doubled last year. TradingLounge itself has grown 45% each year for the last few years. So what I need to find this year for myself is I need to find some nice sort of long-term trends. I mean, I enjoy trading, getting in and out at different points, and short-term, bit medium-term, and all the rest of it. But I've got to have the big kahunas in there, and looking for those bigger trends. So that's what I'll be looking for. And obviously, I'd like to talk about what I do to a point without boring everybody to death. So this is really just a short-term trade if this is going to play out here. And the other point here too is that this level here is number 8 here, 180. So we always call 8 a profit-taking number. So we've got the profit-taking here. So we've got the arrival and the reaction. So we may just get the first high above the level if I got this wrong, and then an ABC back, and then pushing up higher here for that. But I know that the market will want to finish at this 200 here. So yeah, right, just waffling on. I lost my plot. So let's go to here and check on this further. Is that enough? Can we see what we've got there? Okay, so my error, the error of my waves, I was looking at this as a possible B wave up here with a lot of markets, and Apple is one that's moved up there further. The S&P's got this pattern here, but the S&P hasn't taken out that top there, but it will because of Apple's moved up. So you can go long on the S&P now. Now that I've explained a few things, you're probably long anyway, and probably doing the opposite of what I'm doing and making plenty of money anyway, just by doing the opposite of the analyst. But hey, I get it right sometimes. So all this move up here, we need to look at it as wave 1 and back for wave 2 here, okay? And then we're starting to build to the upside here. Now, I've got this here as 1, 2, 3, 4, 5 as green wave 1, but I'll probably have to, I know that I will. I'll have to move that out the way and put that there and look for wave 1 further up here for all of that, okay? But what I am a little bit concerned about is that in terms of the classic trading levels pattern, I'm not quite sure about these lows here. I'll have to check some other charting programs. Sometimes they're all a little bit different to find that low there, because it might be 1 and 2 and 3 here and 4 here and 5 here. And the downside to this is that we would get some sort of ABC here before pushing up again here, you know, and going long at that point. But from what I can see, we should just be going straight up, okay? But normally we'd be looking at this as the first high above the level, the arrival, the reaction, the first high above the level, and then the ABC pattern over here for that. But for this here, let's just mosey on in here and take a closer look at this. So we've got 180, 182, 183, so you know what that is, all of that. That's group 1, of course. And then we've got the midpoint there, 5, and then we've got 8 here, and we could put in group 2 there as well for all of that. So what we normally do is we look for the top, for if you're not in this market already or you want to add to the position, at 183 here, we want to be looking for, well, the arrival, which we have. We've got the reaction here, and then we want the first high above the level, and there'll be some sort of correction here that normally stays above the 2 anyway, and then pushes up here. So that would leave us at this particular point here for that. It's one, because if we get support, if we get a tested support on the number 3, that means that we're leaving this number here. It severs the order flow, and people start thinking of 5, this second strongest number here, rather than being pulled back to here. So psychologically, it all changes once that gets tested support. I know Destiny's accurate, and it's already written probably to a point, so, but that's another topic, isn't it, you know? But yeah, I do know from my experience, once we get that tested support here, then when we're leaving this bus stop and we're going to the next one. Let's cruise along. Square, nothing really to look at here for this. That spike there doesn't belong in the markets, I don't think. This is this is IG Markets on Pro Real-Time trading platform. I like the platform. I don't particularly like the data from a CFD provider because they're basically bucket shops. Your loss is their win. Unless they're DMA, of course, direct market access. So I'm still thinking there should be a little rally here, because I noticed that in PayPal. If I can just have a quick look at PayPal here for a moment. There we go, PayPal. So we can see, without getting into too much to do here, we've got this little A wave, B wave here, and a C wave up here. So I'm looking for this wave 4 here with all of this, and still we're looking for further downside once that's occurred at that point. So yeah, so I think we're just in a bit of a rally. We'll come back to the banks in a moment. I should put this closer to at the end with the banks, but anyway, so I'm still looking for this little wave 4 here, but it may not be the case. We may just come down as well. So it's a little bit of a tricky one, as I mentioned yesterday with this. So let's just cruise in here and have a little bit of a look. So we've got wave 3 here, and we've got this as the A wave here. So I just don't think we've got wave 4 finished in here just yet, but I don't know quite how it's going to play out. It could be the A wave here, the B wave here, and then 1 and 2 and 3 and 4 and 5 up here for this wave 4 over here for this. So we can put this 1 here and 2 here and 3 here. I really don't know how it's going to play out. I can't give you a trade at this point. We could drop from here, or we come up in 5 waves and then drop, but we haven't been through wave 4 yet. Yeah, so I'm not much help here with this, but one of the things we can see here is that the market is slowly finding group 2 here, 65, 72 and 80 as the resistance. We'll see how it sort of, if it fails this time, well then the short trade would be under here for that. But personally I wouldn't bother shorting that down into here. There's just not enough into it unless, anyway, I'll leave that up to you. But I am going to remove that. Okay, we're going to cruise on. So this is how I've had Facebook, Meta platforms, whatever they call themselves. So yeah, we've had as wave 3 here. We're looking for a WXY through here. Always, I've sort of maintained that, you know, we could count this as being finished over here. I understand that, but I wasn't going to make a move until we had the 350 here as the support. So, and here we've got little 5-tick chart set up, so we can go and have a look at that, but I'll just go to the 100 ticks first, where it should have, may have that bearish count on it. Right, so this becomes interesting here as well, because we can go 1, 2, 3, 4, 5 for 1 and 2 and 3 here. But once again, you see how we've got only 3 waves to the 50-60% retracement level. I've got that as a wave 4, and we haven't reached the 61.8%, so it's still possible that we could come down into that for that and have it as 1, 2, 3, 4, 5 here for 1, ABC for 2, and then cruise down in that case. You know, for the 5 waves up here, we'd have to look at it as 1 and 2 and 3 and 4, and then all of this, the 5th wave, is the extension in there. So if the extension's in the 5th wave, it's kind of telling me that this trend here is actually expanding. So we've got wave, this length here, it is what it is. This one here is probably 3 times the length of this move here, isn't it? You know, and then this one here is, you know, at least double this one here. So this is expanding. We've got an expanding trend to the upside, and obviously it's, you know, correcting, rebalancing at this point. So it's possible that this can move up here further. Now on the daily chart, I had up here for that to go long. On this 100 tick chart, we've had this on this one here, because that would be the B wave at that point, an A and a B and a C. So let's go to the 5 tick now to see if we can get a better entry on that. So I think we've had this here for a little while, so let's just get a little bit more data in here. So we've had this here for quite some time as 1 and 2 and yada 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 for 1 and 2 here, and then 1 and 2 here. This is the other way to count this to the upside. You may be able to count it differently than that, but I've pretty much sort of nailed it down, I guess, to the best fit. So we know that, well, if in that previous oh, that's just noticed something else. I'll need to check that. I wonder if that's wave 3 and 4 and 5 there at that point. Let's just do a few things here. Let's check on that. Check on this. That's 38.2% for this one. It doesn't really look like we've got an impulse wave here, does it? This move up through here doesn't look impulsive. It looks more like an A and a B and a C wave into this. But so this is 340. So that means we can go from 40 to 50 here. We can go 1, 2, and 3 here. So 3, 4, 3 in here. Forget that. That's pretty close. So obviously the the resistance, if this comes up here for whatever reasons, then this last previous low here is going to be the resistance, which is close to the 3 here. So that means that we could look at this in terms of a classic trading levels pattern at this point here, and then we could bring this down at that point, waiting for the first high above the level. So in case we're, even if we're wrong, we still need to make money, so this is what we're doing. This is a way to look at that. Alrighty, so 343, the top of group 1, we're looking for the first high, then we can go long above that. We'll check it out tomorrow, see how this develops a little bit and see what it looks like, and I'll need to double check that there as well, because I was just looking at that thinking 1, 2, 3, 4, 5 down to that point. But anyway, I need to pull that apart further and have a little look. You don't always get the perfect structure. It's like this one here. It's 1, 2, 3, 4, and then you got 1, 2, 3, 4, 5. So you go, oh well, wave. If somebody was new doing this, they go, but Pete, wave 4's overlap wave 1 here. But you just have to be a little bit philosophical about it. At times to a point, because you can't look at this here as down for 1 and back for 2 here. It doesn't sort of work. And news events normally sort of kick that out of its trend, but the main traffic is here. That's what I always follow. I follow the volume, so to speak. Let's cruise along. So Tesla, yes. So we've been looking at this in a couple of ways. Let's just go over what I've done right and what I've done wrong. So first of all, we've had this here as wave 3 with an A and a B and a C here for wave 4, and from that point we should just push up from there. Then I've had this here as wave B sitting here, and the reason I've done that for is because I felt that the rest of the markets were going to roll over, and I thought, well, they'll do that, but this is a little bit impulsive here. So now we need to look at this as the A wave here, the B wave here, and the C wave here, just coming up to cover that gap there, and then we can look at that as wave B here. Let's just go to the tick chart and I'll come back to this, all of this here. I just want to have a look at what I did on that trend to the upside. That should be plenty. Right, okay, yeah, rightio. So let's just start from the bottom here. So I've counted a little 5 waves up here for 1 and 2 and 3 and 4 and 5 here. So I've had that 5 waves there. We can look at it as wave 1 and 2 here. Then I've had 1 and 2 and 3 and 4 and 5. That's why I had the A, B and C to that point. That's why I had the B wave there, right? Well, another, just a second reason. So I've got 1, 2, 3, 4, 5 here. So we could look at that as 1 and 2 here, and then 1, 2, 3, 4 and 1, 2, 3, 4, 5 here for wave 3 here, or wave A. I'll put that up top there. And that was my wave 4 retracement level here that I had. So that means that I need to put that back down here. So that would be the A wave, the B wave, and the C wave here for this wave 4. And then I was thinking from wave 4 here, they would go up for 1, 2, 3, 4, 5 and finish here for this. But if that, this wave 4 here, I've graded out, but if I take this wave 5 here and put it up at this wave C here, then this top here becomes wave 1 at that point. And then back here comes at wave 2. Now, it may not pull that far back, but there is a bit of a gap here, and 1 is a good number to work with and all the rest of it. So we'd come back in here somewhere. We would get, after this fight, 1, 2, 3, 4 here, 1, 2, 3, 4, 5 coming up to here, we'd get some sort of retracement level at that point. So I'm thinking that if we're going to go long, we should wait for if you're not long already above here, because obviously we've talked about that a couple of times in here, obviously before. I can't remember what I said, but it would be typical. We don't need 2 of them there. It would be typical of me to look at this as a setup on this level here. That would just be typical for me to do that. But and if you're long, that's great. So yeah, we've got a few things going on here, but in a nutshell, 1, 2, 3, 4, and 5. The other point here that this 3-wave move can be the A wave, and then a B wave and a C wave here to the B wave. So not that it's going to make a big difference, but when this comes down here, it just tells me that I just need to be a little bit extra cautious. So I don't think it's a good idea to chase this at the moment. You know, we can see that that was all in here at the opening, and then it's petering out into this point here, and it's going to pull back. So let's just wait for the pullback here to look for the next setup on the long side for this market. Okay, so Microsoft. So with Microsoft, I was looking at wave 3 here. The same story applies here. I was looking for the A wave, and then an A and a B and a C wave for the B wave, and looking for 5 waves down here. So Microsoft has fallen out of bed a bit here, rather than the other ones. We had a down day here, but we can see supporters come in, because we'd always expect a bounce off the number 3, off the third, in this case 30. Always expect a bounce coming down into it. So yeah, we obviously need to go in and have a look at this, but at the same time we also need to consider what's going on in the other markets now, because we've got to kind of pull everything in. You know, if the S&P breaks that high there like Apple did, then we're going to be bullish, but we haven't confirmed that in the S&P yet. But if I had to make this a change here, that means we'd have to have this as a WXY here for wave 4 being sitting over here for that. And then we need to look at this as wave 1 coming up to here, and then back for wave 2 at this point, and then moving up there. So let's just go to the 100 ticks. Alrighty, so this is kind of interesting, because this one here, if I stay with my B wave up here, we got it pretty clear. We got 1, 2, 3, 4, 5 for 1 here, and ABC for 2 here, so that's clear. All of this move down here that we've been through as wave 3, that's clear. Wave 4 is clear, unless wave 4 needs to be shifted over to that spike there. That's what I'm not sure about. I don't think so. So I'll leave it there for the time being. And then I was thinking this, well, I was a bit unsure about this particular bar here, but we could look at all of this as wave 1 here, and then wave 2 coming back into one of these spaces here, and then all of this is wave 3. So I was looking for wave 4 to come down here, but obviously we're coming in too high here now. So even if I took this on the line here down to this point here, the 38.2% retracement level is here, so we're traveling above that now, so that's not a good sight. But what we could do, it's hard to get 3 waves out of here. It's more like 5 waves. So even if I put wave 4 over here for that, I'll just move this little wave 1 and 2 out of the way. Oopsie daisy. Just move them out of the way for a second or two. Let's just still consider the bearish side here for a moment. I mean, you'd have to admit there's a pretty good case for 1, 2, 3, 4, and 5 down here for the wave 1 that I was kind of looking for in a roundabout way. And then if that was the case, then taking it from here to here, we can just start putting in the flags here for that. That would be the 50-60% retracement level. So this looks like a little impulse wave here, maybe an A and a B, and this is not finished here yet. I need to pull that apart. But because we've got those 5 waves there, I don't really want to go long here, because we'll be looking at some sort of ABC pattern in here for this wave 2 to pull back here. I don't know how this plays out just yet. I don't know if it's like this. And this is 1 and 2 and 3 and 4 and 5 here somewhere. So wave 4 here and wave 5 here. And then we come down at that point. I mean, I can see 1, 2, 3, 4, 5 to that point. So this all must be wave 1 there. So let's just, let's label that. Let's just put that little wave 1 here. It's a start. We might need to work on the whole thing, but so that could be it here, meeting, because it's not really about this so much. It's more about this block here. It's about that block. Yeah, so you know, if I could clearly see 3 waves down here, right, then I would risk going long here, but I don't see that, so I don't have anything to back me up here. I could still be wrong and it could still be bullish, but I just don't have enough evidence to present a case to go and buy here. The risk is too high, in my humble opinion. So we'll just leave it at this and let's just see how that travels. And yeah, let's give it another session, and we could also look for short trades next time as well with this. So just coming back to the daily chart here. Sorry this video is so long, but I think it's good to talk about these things. So we're thinking about wave 1 being in play, going back for wave 2 now, and 3, 4, 5. I could be wrong, but we do have 5 waves here, so I have to respect that at this point in time. Obviously, if this top gets taken out here, we need to be long and we're done and dusted, and you know, the horse is bolted. But yeah, anyway, that's sort of where we are. I'll just have a quick look at the banks. Let's go to, we were looking at PayPal. We've been looking at Morgan's here. So with Morgan's here, there's a good case here that we can count 5 waves down for 1 and 2 and 3 and ABC for 4 and 5 here. A little bit dodgy. This is the 50-60% retracement level. It does look a little bit impulsive to the upside. I just want to give it another session or two before I call that in. If I have a look at Bank of America, it's also the same as well. We could look at this as wave 1 and 2 and 3 and 4 and 5 here, then an ABC pattern coming back into the box. We could also look at this little move here as a 3-wave move for the A wave here, the B wave here, and the C wave down here. So it's possible that they can go up. I just need to get a bit more information. This here is impulsive, this little move here, then it's corrective, and then it's been impulsive. So I really just want to see how that fades out here. You know, at the end of the day here, looking at this move across here, we could look at this as wave 1 and 2 and 3 going up here, and then there would be wave 4, and then there would be wave 5 here. So if we get those 5 waves, well, then we'll just simply wait for the little ABC to come back, and then we can go long. Then we can go long above this little B wave high here for that. So that's how we'll handle that. We need 5 waves here for that evidence off that low. Okay, going long here does expose us to risk. It'll probably move up, but we haven't confirmed it with the Nasdaq or the S&P yet as well. So yeah, we're sort of in no man's land. Alrighty, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.